Good afternoon and welcome to Markets Today. I'm your host, Mbithe Muema. The first day of the trading week, a bit weak with regards to turnover on the Nairobi Securities Exchange. However, we do have a lot of information and insights lined up for you. We will be giving you an overview of global market trends, what's been happening with global equities, as well as geopolitical risks, what's happening in Saudi Arabia, and what impact do we actually expect to happen with regards to the cost or price of oil over the next 3 to 6 months. We'll also be looking at the local markets, what happened with regards to the fixed income assets as well as the equities on the NSE. What was the investor sentiment over the last 1 week? We'll also be giving you an update on diaspora remittances. The numbers for the month of August are already out. We'll be talking about that and also talking about the slight weakness that we saw last week on the currency. Not too much weakness there. It looks like it's stable. And we'll be giving you an update of what we actually expect to see in this coming trading week. And after that, we'll also be just broadly looking at markets. It's the beginning of the week. Are there opportunities for you to actually take profit or to be able to buy cheap stocks or even invest in the fixed income market? For that discussion, we will be speaking with Mr. Reginald Kadzutu, who is the Chief Investment Officer at Amana Capital. But prior to that, we give you an overview of what's happening globally. We saw a slight recovery on markets last week as the Fed reduced its rates by about 25 basis points. Over and above that, we also saw a correction of oil prices last week. Recall, on Monday, the prices had actually gone up to 19% day on day following the attacks in Saudi Arabia. Now, later in the weekend, actually this weekend that has just closed, we also saw reports coming out with Saudi Arabia saying it could take them up to 8 months to actually rebuild the resources that have been affected by the geopolitical risks affiliated with the oil price. So it seems to us that it could be slight volatility. The oil prices have actually corrected downwards following the spike last week on Monday, but you could see some slight volatility over that. But over and above, the global markets do look stable as at today. Now, looking at the Nairobi Securities Exchange, last week was a very aggressive market with regards to the foreign investors. Turnover was up 58% week on week, and we reported about 2.8 billion Kenya shillings traded with regards to turnover. The top stocks were KCB, about 16.3 million shares traded at the 40.05 mark. Another 16 million shares were also traded in Safaricom. The pricing was about 27.35 as at Friday. We also saw huge trades on Equity Bank as well. So last week it was largely the foreigners who are in the market looking at the banks. There were huge trades that went through KCB. Another huge trade went through Barclays Bank as well. And there's also mixed sentiment with regards to Safaricom. Now, moving over to the fixed income market, that was certainly a mixed bag. On the short end, and that's the T-bills, we saw all investors pile up their demand with regards to their allocations for the central bank T-bills, focusing on the 364 T-bill that attracted up slightly above 24 billion, which is more or less the total amount that the government was coming to seek from the market last week. Now, this was very interesting because in the other previous auctions, we've seen a bit of interest on the 3-month paper, but this actually is a telling sign with regards to the sentiment that the market is communicating to us. It looks like the conversation on the interest rate cap might not happen. There's a slight expectation of an amendment to this bill. So now that we are not seeing any of this coming up, especially because the Finance Committee did come out last week and say absolutely no review to this rate cap, we're seeing investors actually trying to lock in the best returns that they can. 364 T-bill actually closed at 9.7% as at last week. With regards to the longer end of the curve, there was a 15-year reopen for 2019 and 2018 by the government. They were looking for about 50 billion shillings. They got in bids of 32.6 billion. These bids were priced at 12.67% on the higher side, and that's a return for about 15 years. So not too much traction with regards to the longer dated paper. The market was, the central bank was also in the market for repos. Last week, we saw 2 repos with the central bank coming in to just get money or liquidity out of the market. That said, what are we looking forward to this week? A couple of things are happening. The Division of Revenue bill has already passed through and gotten a presidential assent. We expect money to start trickling into the counties as soon as this week, and this will be positive because liquidity has not been felt, especially by the SMEs and the people at the bottom of the pyramid. We think there'll be more money supply, at least for this week and going forward, and hopefully we'll see a bit of improvement with regards to economic activity in that regard. What's the other thing we're looking out for this week? Monday the 23rd, Standard Chartered Bank goes ex-dividend for its 5 shilling interim dividend. Tomorrow, expect the price to correct by about 5 shillings downwards, so no surprise when you see any correction on this particular stock. Other than that, we will be talking to Reginald Kadzutu, who is the Chief Investment Officer at Amana Capital, to give us an overview and his sentiments with regards to the assets this week. That's fixed income and that's equities, and what you need to look out for this week. We take a short break on daily commodities, and as always, we are streaming live on our YouTube page as well as our Facebook page. That's Metropole TV. Don't go anywhere.